Good morning. I'd like to bring the pension committee meeting to order, and at this time, I'll turn it over to Valesco to go through the numbers.
Great, thank you, Bob. Good morning, everybody. It's a pleasure to see you on this nice and cool summer day here in Western New York, or Central New York, I should say. So it's a great opportunity to give you an update on what's been going on with the pension plans. I'll start with just a few brief overview comments, and then I'll run through the various plans. But I want to talk a little bit about, there was a little bit of discussion before the meeting about the positive stock market that we've been in, which is a good thing given where we've been over the last year and a half. We've had extremely positive economic data so far this year, and just yesterday, a print of 2.4% for economic growth in the second quarter. So good economic growth, pretty good corporate earnings. They're down, but they're better than expected. Many companies beating their earnings, and the continued signs that inflation is declining. And I was driving in today at 8:30. There was some inflation data today that was very positive. So all of this combined together has helped move the stock market higher from the lows that we saw back in October. Just in the last 2 weeks, the S&P 500 is up 3.6%. And while some parts of the economy clearly have slowed down, especially the housing market, because of higher interest rates, we have not seen the economy moving towards a recession. Obviously, the GDP data yesterday supports that 2.4% in the second quarter, but that's been very confounding to the skeptics who have been positive that there is going to be a recession any minute now. So from interesting, coincidence that obviously that hasn't happened, and the stock market has really liked that. It's been about 3 to 4 months, probably about 4 months since the S&P 500 has dropped 3%. And that's the longest stretch that we've seen that happen since World War II. You probably, if you're listening to the financial media, you've heard the commentary that the Dow Industrials were up almost a record number of days going back to the 1800s, late 1800s. So we've been in a really positive stock market. Now, the stock market advance, and we'll talk a little bit more about this as we go along this year, the S&P 500 has been narrow, and that's been a number, about 7 stocks. The media is calling them the Magnificent Seven, like the Westerns from decades ago, the top 7 big stocks in the S&P 500. That's been the case since about mid-March when we had that banking crisis, when Silicon Valley Bank and a few other banks failed. That sort of changed the narrative for several months in the stock market, got back into large cap technology growth companies. But since about mid-May, that narrative has started to change, and the advance in the stock market has broadened out. And that's a very positive sign when you have a broader market, more stocks participating, and moving ahead than just a narrow number. And we've seen, since about mid-May, the S&P is up a very nice 11%. But small caps are up 14, mid-cap stocks are up 12.5. So that's that broadening out that I'm talking about. So that's a very positive thing. And then, of course, since about the beginning of October, when the inflation data started coming down, that's really been the very powerful advance in the stock market. And we've seen that in the pension plans returns. The plans generally are up about 19%, a little bit more than 19% since that early October number. And equities are up 29%. Since that time frame, all in your pension plan. So that's going to help from the funded status of the plans that we talked about at the last meeting with the actuary here. And the lesson about all this is that an old saying on Wall Street is that bull markets climb a wall of worry. And that's clearly what we've had over the last 9-10 months, a wall of worry, and yet the stock market still keeps moving ahead. And it's a testament or a lesson for investors to stay disciplined, stay involved, or stay into your asset allocation, and it'll pay off over time. So with that, we'll take a quick look through the various plans, starting on page 1 in tab A with the non-salary DB plan, looking at the asset allocation and the comparison to the investment policy. Equities are just a little bit over 65%, and that's right in the middle of the IPS range of 51 to 71. So in line with the investment policy. The remainder of the 35% in the portfolio or the fund in fixed income, just under 7% in the inflation-protected securities, and fixed income bonds at 25%, and about 2% in cash right at the end of the quarter at the end of June. Page 2 is the equity holdings. We have not made any changes to this. It should be about the same as when we last spoke to you in the spring. The biggest holdings in the fund are large cap stocks, just over 45%. So that's had that 19 to 20% gains in that part. Down the capitalization spectrum, values continue to do well. Small cap stocks, as I said, have underperformed for a little bit of the quarter. You'll see that in the data, but that's starting to turn around as we have this sense that maybe there's going to be a soft landing and the economy is going to slow, inflation is going to slow down enough so that there won't be a recession, and then obviously they will have a reacceleration, and that's when small caps and value really shine. International's been the best performing asset class, that top part, large cap developed, since the fall period, that October period, up over 30%. And there's still potential, if the dollar continues to weaken, that international portion provides some really nice diversification. On page 3, in the fixed income holdings, we did make a change in the portfolio in the spring. In the May time period, you see the pie chart here, the light blue pie where it says intermediate government at 9.5. That had been 2 different sleeves of short-term treasuries and short-term corporates. So we'd had a shortened duration from the overall bond market for a number of years in the portfolio, slowly extending that duration, and we made the bond portfolio neutral to the bond market in the spring. So we have a duration of 6.3 years. That's the interest rate sensitivity of the bond portfolio, and a yield now of just under 4.8%. So basically, in neutralizing the bond portfolio, we recognized that the biggest risks that we saw in bonds over the last year and a half, meaning the yields moving up over 500 basis points, we're coming to the end of that time frame of that happening. So the risk of big losses in the bond portfolio are probably minimized. The duration has come down to a more historic level, and obviously we have a lot more yield in the bond portfolio that's really going to help over the next few years with improved total return out of the bond portfolio. So with that less risk in the bond portfolio, neutralizing it, and the potential that maybe sometime next year, if the economic data does weaken more than it does now, and that's an if, we don't know about that, the Fed might even start lowering interest rates, and then you'll have price appreciation on top of that. So in this type of environment, we want to be neutral, even the same duration as the bond market, versus having something extended or a reduced duration in the bond portfolio. No changes on page 4 to our TIPS holdings, keeping the TIPS portion of the portfolio just about 7%. And this is really an insurance policy. We've talked about this in previous meetings for unexpected inflation. We've seen the inflation come down, that's certainly positive, but it's probably going to be higher than we've experienced over the recent past. And there's no guarantee that with the services sector and wages as strong as they are, that's going to completely come out of the economy. So we want to have a little bit of an insurance policy, so keeping the TIPS portfolio steady to combat any unexpected levels of inflation.
Is there any data out there about wages settling, or is it?
The data still is that the wage pressure is there in the economy,
Okay.
so it's still out there. I have a slide on it that we can touch on briefly, but there's no sign that wages are slowing down. The job market is still tight
Is the impact
enough.
the supply and demand of the labor?
Correct. Yeah, there's a lot. Job market is still tight enough. Even with we've seen some layoffs in the technology sector, but that's not been enough to have much of an impact.
Okay.
Page 5, quick look at the performance. We've got several time periods here, quarter to date, year to date. I like to show that market recovery period, and then we have the historical data. So your quarter, March to the end of June, strong returns, 3.5%, $1.2 million, and the value of the non-salary DB plan at $35.9 million at the end of the quarter. We've had a 2% advance, just to give you an update of where we are here towards the end of July, a 2% advance. Value of the accounts up to 36.5, and that puts the year-to-date as of the close yesterday, or the close on Wednesday, at 11% for your year-to-date gains. So that's on top of the 8.7 that we printed at the end of the quarter. So been very, very strong returns. And during this market recovery period, this really just shows you how much the market has advanced, how much the situation has improved since the fall as this inflation data has started to decline. A 17% return in the non-salaried plan during that time period, gain of $5.2 million. Your 1 year return, 10%. So this is, again, when we were here a few quarters ago, you had negative numbers in these time periods. So being consistent with the allocation, letting the market recover, and during the rebalancing that we've done during that time period, we've picked up more shares at a cheaper price, so the recovery comes a little bit faster because of that. Your historical returns, looking a little farther out, 3-year returns, $7.2 million gain, 7% annualized return over 3 years, and then the inception date takes you back to the beginning of 2020, so just 3 months before the COVID crisis hit, a 6% return. And with these gains, that looks like 6.5% now just to the end of July. So very strong absolute returns out of the portfolio. Just a quick look at the data on page 6, just to give you a sense of how the returns have been diversified or broken out along the asset class spectrum. Looking at the quarter to date, 6% return out of the broad equities portfolio, but the leader you can see was large cap stocks, and that's one data point I'll show you as we get through the various reports or the accounts to show you how narrow that leadership has been. So a little over 8.5% for the large cap stocks. Small cap got hit really hard in March. That was a side effect of the financial crisis or the banking crisis. A lot of financial stocks in the small cap area, so that was really hit hard when those banks failed. But we're starting to see that change now that the economy is looking like it's not going to slow down as much as people expected. Year-to-date numbers, almost a little over 12.5% for equities, and that again driven by that large cap return. But you can see not a bad return out of the international markets. That's the MSCI EA EFA index towards the bottom of that equity slide. And that plays over into this recovery period where I mentioned the international returns being the best performing asset class. That October to June period, it's an arbitrary period, but this is really when inflation started to come down. So it's, I think, as a relationship to how the plan is 5% for large cap stocks, we're back in a bull market. That's a gain from a low of 20%. So that's a positive thing that we're all feeling here. But that international number, 31%, is a sign that the international economies, their valuations for a stock market are more attractive than ours are at the moment. And the declining dollar. So those two levers have made international investments a much more attractive place than we've seen in some time. The 1 year numbers, as we move farther over to the right-hand side of the page, 16% return out of equities, and that's led again by value stocks here. So that's again the sign of economic resilience and the performance of these value assets with a stronger economy. And that's been the case if you look on the 3-year numbers, what have been the leaders over the last 3 years. And Alesco has a very nice complement of all those stocks. You certainly can't sneeze or criticize a 14.5% return for large cap stocks, but almost 17 for value, 15.5 for mid cap, and 15% for small cap stocks. So it's not unexpected that you see a little bit of a shift after 3 years of gains from those asset classes to large cap starting to be a better performer. But that's, again, the benefit of a diversified portfolio. Alesco is not trying to figure out what's going to be the next winner. We want to have exposure to all the asset classes in a very diversified way so that it's a longer term perspective and we can move through different market cycles. And you see you've got an 8% return over a 3-year period. It's a small sample size, but that is still a much better annualized return than the historical stock market has delivered over time. So that's what a diversified portfolio will do for you from a long-term perspective. Just a quick look here at the next 2 lines down as a comparison for fixed income and the real return assets. We're finally seeing a little bit of a higher return out of bonds, but that's because yields have come down a little bit. They're still up, but they're down a little bit from where they were in October, and that's why you see that return of 3.76%. Again, just a little bit off from the bond portfolio or the bond market overall, the aggregate bond index, but very close to that because we've shifted our duration to be neutral, so it's going to be much closer to a performance standpoint. And then the 1 year and 3 year numbers, again, still feeling that pain of 500 basis point increase in yields by the Federal Reserve, or interest rates, I should say, during that 3 year period. So we're still seeing negative returns for the bond portfolio, but just a little bit better than the aggregate index on that 3 year period, down 3.3 versus a 4% loss. But that the turnaround for that, or the silver lining, is the higher yields. I mentioned to you the yields that we're seeing in the bond portfolio of upwards of almost 5%. That's really going to start paying off as the maturities, as the bonds mature and they're reinvested into higher yielding coupons. We're certainly going to see much higher returns out of the bond portfolio going forward. And then the real return assets, I just highlight a couple time periods to show the benefit from a performance standpoint. That 3 year time period, a 70 basis point return versus the loss for the overall bond market. That's the idea of watching the benefit of the inflation component for the CPI and how that's been a diversifier for performance. So fixed income returns were actually down below 3% because of that loss, less than 3% because of the real return portfolio performance. Highlight of the performance of value versus growth. We've talked a lot about that. In the year-to-date, value has underperformed, but as you'll see over the last 3 years, value has outperformed. That's the green bars that highlight the outperformance. And over the last 5 years, growth was a better performer, but we're starting to see some of those asset classes roll over for value to outperform. So it's just the illustration of how Alesco structures our portfolio for long term. And that's what the last column shows you, the January 2000 to 2023, that even with a 5 year period where growth has done better in a very low interest rate environment, value still outperforms. So we want to have a little bit of a overweight to value, and that'll benefit the plans for the long term. Any questions at all about that before I run through the others in the next couple of minutes? Make sure I stop for some questions. Okay. All right, so real quick on tab B and C. Tab B is the salary DB plan. You'll see the asset allocation is the same as the non-salaried at 65.7%, right in the middle of the asset allocation, IPS range, I should say. Page 11, no changes to the equity holdings. They remain steady, consistent with the non-salaried plan. On page 12, for the salaried DB plan, we did make the change in the fixed income holdings. So we extended the duration and made it neutral with the bond market. TIPS portfolio, same thing, 7% roughly of the portfolio mixed between long-term and short-term TIPS, no change there. Performance on page 14 for the salaried DB plan, 3.5% return for quarter to date. You see the year-to-date returns at just below 9, and that same almost 17% return. So returns really almost identical because they're all managed in the same way at the same time for the DB, for the salaried and the non-salaried. 10% return for the 1 year period, and then that just shy of 6% over the last 3+ years to the inception date. Notice on page 15, the same thing for the equity returns, 6% for equities in the quarter to date, and that bull market recovery period, 24% in that October to June period. So all the equity numbers, fixed income, the same for the salaried plan as for the non-salaried. Holdings on page 16 and 17, just to highlight those if you're interested. And then finally, the Utica plan on page 18. You'll see that the equity allocation is just a little bit higher. The cash flows are slightly different in the Utica plan than the other two, but roughly the same, and the equity allocation right in the middle of the IPS range as well. Page 19 for the equity, same here. You'll see the large cap blend, largest holding, and the rest spread down the capitalization spectrum, about 29% international, the same as the other two accounts. The fixed income plan for Utica, we also made the fixed income change there, neutralizing the bonds holdings to the duration of the bond index. Fixed income, so the real return, the TIPS portfolio, the same too for Utica as well. Page 22, just the performance of the Utica plan. You'll see the same performance attributes on the page. a little over 3.5 in the quarter, just shy of 9 year to date, and just shy of 17 for that recovery period. A 10% return for the 1 year, 7.3 and 6% going back to inception. Numbers on 23 exactly the same as well. So the benefit of having a same allocation for all these provides the ability to go through these on a fairly quick basis, but the same holdings, virtually the same returns. All right. Questions at all for that?
In the very beginning, you quoted a 4.8 yield on the bond
Mhm.
portfolio. That's looking at the portfolio's expected maturity and the current interest rate, correct?
Correct. That's the current yield that we're seeing on the bond holdings.
Thank you.
Yep.
One question.
Sure.
This one going through my mind. How much is artificial intelligence going to change this? Does that make sense what you're saying?
So from our perspective, that's, if we take a quick look on page 27, that'll just give you a little sense of how much that's played out so far this year. So page 27 shows you the stock market leadership. Thank you for bringing that up. And how narrow it's been. But these 7 companies, I referenced the Magnificent Seven, these 7 companies, Apple, Microsoft, NVIDIA, Alphabet, Meta, they're all developing AI, they're the leaders in that. That's been part of what's driven the stock market higher so far this year, the excitement about AI and how that's going to play out. And it, from our perspective, it's certainly going to impact businesses all over the place in terms of how companies are going to utilize it, how it's going to benefit them, but what disruptions it has from a company standpoint, I think that's still unclear, but it's certainly driving the stock market and interest in the large capitalization stocks. But the thing that you can, about it from an investment standpoint, is that there's long illustrations throughout history that the leading companies that have products and services may not always be the best investments in terms of the long term. So that's something you have to think about. And the valuations of these companies and how much they've gone up and the narrowness of that. From an investment standpoint, valuations do matter, and the price to earnings ratios and high price to earnings ratios indicate a future return that's probably not as strong as if you have a lower valuation metric. And that's what we see the benefit of a diversified portfolio. And I've got one more slide before my time's up at the half hour to illustrate that. But as you see on this page, the return of the S&P 500 at the end of the quarter was about 17%. That was 75% of the return of the S&P 500. The remaining 490 some companies only contributed about 5.7% of the S&P 500 return. So very, very narrow leadership. And what's also interesting is that the small cap index actually outperformed the rest of the S&P 500 when you take out those 7 top companies. So is it likely that for the next quarter and the following quarter and the following quarter after that, these companies can continue to be the leaders that way with valuations as high? Probably not from our perspective. So that's why you want to have more diversification. And if we just jump to the page 36, this will tell you, give you as best as you can build in the stock market a roadmap for possible returns going forward. This is what global equity valuations look like as of the end of the quarter. And when we say valuations, we mean the price to earnings ratios. So the price of the stocks divided by their earnings gives you a sense of where there is value or an opportunity for better returns, cheaper stocks that are going to advance in the stock market. So the 3 color patterns we have here, on the left-hand side is the U.S. market, the middle is the international market, developed and the emerging markets on the right-hand side. And then we've divided up each of these individual asset class, these individual regions by asset class, and that's what the bars are. Large cap stocks, small cap value, and then growth on the right-hand side of each one of these. And then the bar itself is the forward price to earnings ratios over the last 15 years. So where has the valuation of these asset classes been over the last 15 years? The black bar is the median, so where that's been in that time frame, the median, then how much has changed over the last 6 months. December of '22 is the red triangle, and then the market changed to the end of the quarter in June. So you can see for the U.S. market, I told you about the gain in the S&P 500. That's what the large cap market is representative of that. Valuations have moved up for large cap market well above the median. Small cap stocks got hit in March, and they've started to recover, but you can see how much farther below the median they are, and the whole range over the last 15 years. Small cap stocks have a lot of room to move. That's why we have the exposure that we do to take advantage of that. Value stocks have had a great run over the last 3 years. They're pretty fairly priced. And those growth stocks, so that's the AI stocks, those Magnificent Seven, they're still pretty pricey from a valuation perspective. So that gives us pause that the S&P is going to be the leader going forward on a consistent basis, not necessarily from any particular quarter. So we want to have that exposure to small cap, and as the evidence keeps building, if the economy is going to improve or at least not stagnate, we're going to see small caps do better. And if you just look briefly at the other markets, the same story plays out in the developed international world and the emerging markets. And if the dollar remains weak or continues to weaken, that's going to provide some ammunition and fuel for those emerging markets and international markets to advance as well. But China does play a big role in that, and their economy is struggling a little bit as they're coming out of COVID. So we'll have to see how that plays out. But we're generally optimistic about the prospects for small cap stocks, which we have a good component to, as well as the international markets, especially in the developed world.
Tim, comment on just from the authorities' cash. We're heavily into U.S. Treasuries with our reserves.
Yeah.
Any comments?
So, I mean,
It's been great.
It has been great, and the Fed raised interest rates yesterday, so yields moved just a little bit. And that's we've seen actually just in the last day or two, some of the comments, I haven't completely analyzed it yet, but Japan trying to normalize their interest rates, move to a higher yielding environment after having 30 years of very low interest rates. That's changing some of the dynamics of the worldwide bond market in addition to what's going on here. So treasuries I see them having pretty high yields across the board for much longer than we expected. So there's certainly a positive there from that. A lot of individual clients moving into T-bills from using CDs. So certainly a benefit for that. Yeah.
Good report.
Very good. Thank you.
Any more questions for Tim? That was a great report, thank you. Mr. Chairman, that concludes the pension committee.
And we'll welcome you back when you bring this kind of news.
Well, thank you for your patience after the last couple of quarters when it's been tough.
Good. Thank you. Thank you, Tim.
Thank you.
Appreciate it. Have a good day.
All right. Good to see all of you all. Enjoy the rest of the summer.
Okay, we just take a few minutes and then we're going to get right into audit and finance. I think, easy to understand, but I do appreciate what they're trying to do with some of their graphs and everything, so we get a visual. And it's definitely been, it continues to improve with Linda and Melissa on how they're putting this report together. And you'll see that. It seems like every month it gets better. I always say we have to make reports like this for the common person to understand.
Yeah.
And I know a lot of you guys like, now you wanna take these things home and read them.
Yeah.
Put you right to sleep. Okay. Notes over here. See what I'm doing. There is school year. Good, okay, all right. Audit and Finance Committee, I'd like to first bring John Maloff to the table here to talk about our general liability and our garage keeper insurance. Nice seeing you.
Nice to see you. Good morning, everybody. Hope you are all enjoying this wonderful weather.
78 degrees.
You can pass these around. The one item on my agenda for today is the Transportation Center and our property and liability policy renewed on July 1st of 2023. There's a little comparison for you. Last year, our cost was $107,483, and this year it's $115,996. Our limits of coverage always increase due to the increased cost of construction, and our parking receipts are up. The liability coverage is based on in part on our receipts for the parking garages. We did pretty well considering what the market is doing. Our deductibles for the property claims, which are fire, windstorm, and so forth, are $2,500. Our liability has no deductible. Just as an aside, so you know, for the last period, experience rating period, we've had 10 liability claims, four of which have been settled. They're all settled. 4 that have been settled are about $24,000, and the other 6 were settled for no money. So we were found not negligent. They're all slip and fall claims. Interestingly enough, they're not in the winter. That's very unusual.
Humidity will get you every time.
It's the holes in the sidewalks,
Basically, it's the curbs.
Yeah.
that too.
And now, our bus companies may have had to pay, which I don't know, I'm not privy to those that we got away with, because a couple of them were people falling out of the bus, which is not our problem, in my opinion. We had one property loss, the backup of water in one of the bathrooms, and that was about $1,000 after our deductible.
Let me ask you something on the overall insurance business, just your comment, like all these storms and everything, how it's impacting. There's a lot of insurance carriers seem to be even leaving Florida, as we hear.
In California.
In California. Overall, that's impacting the market at all on all our insurance?
Everybody's insurance. You're gonna see when your homeowners and your auto policies come up for renewal. I just paid mine, it was up 25%. No accidents, no tickets. Basically, the weather conditions, the fires, the tornadoes, and the third-party settlements are just out of control. I have no great love for these insurance companies, but you need to understand that the companies buy insurance from what are called reinsurance carriers. And they assume, for example, on your auto policy, if you have a $300,000 liability limit, your carrier probably has bought insurance for themselves, for their whole book of auto business, over $100,000. So that that cost is what's really driving the market. It isn't really the names that you're seeing on your policies. It's basically what they're having to pay for their own insurance to keep their balance sheets proper. Unfortunately, in Florida and California, the balance sheets are not in good shape. And as a result, just yesterday, more companies have pulled out of California. So California has an assigned risk pool like Florida does. Those pools are basically insolvent. Taxpayers and policyholders are funding them. It's as simple as that.
Julius?
Yeah, I got a question. This may or may not have anything to do with what you're talking about. The insurance policy that we have, whereas down at the hub, someone would get hurt down at the hub, what kind of protection do we have with that?
We
Does it-
buy first-party liability insurance for all of our hubs and for the ITC. All other liability and auto is self-insured. We have $1.5 million deductible for auto liability claims, and we have $1 million deductible for general liability claims. In the high-traffic area like the hubs and the ITC, we don't want to eat the loss, so we're paying an insurance company to do it for us.
Interesting. It's interesting, the increase in what's happening. And I was talking to some people that live in Florida, and everybody boasts about the no income tax down in Florida. But I talked about some of their
Oh, they charge for
policies,
everything else.
their homeowner policies and stuff.
Exactly.
Holy, wow.
They got fees on everything.
Yeah.
Absolutely.
Those
It's
homeowner policies are out of renter's insurance, everything.
Everything.
Yeah.
I have licenses in most states. And Florida, California, the Carolinas
Mm.
are impossible. I'm prohibited, they won't let me write any new homeowners policies in Florida or California. And the majority of those policies that I did have that were homeowners policies, they've not renewed. So I feel very badly about it, but I don't have any place that's willing to do it. So everybody's ending up in what's called the Citizens Insurance Company. Does anybody have a Florida policy? What's interesting, whether it's
I got family
auto,
got Florida policy.
homeowners, umbrella, every policy that comes through, those that I still have 2 surcharges on them. One is for the insolvency pool, and the other is for the windstorm pool. Nobody can get windstorm under a homeowner's policy. You have to buy it through the pool.
So Texas is pretty rough too, isn't it?
Yeah. It really is. I'm not a happy camper these days. Nobody's happy with me.
You should have been, the investment guy just came in and we liked him. We want you to get the hell out of here.
You're right.
All right.
All right.
Anyway,
Thanks, guys.
any
Anybody have any
questions?
questions?
Any questions? Okay, so, need a motion, bring this to the full board. Tina, second. Any question? Darlene? All in favor? Aye.
Aye.
Okay, very good. Thanks, John. Okay, moving next. Linda's gonna talk to us about our financial statements for the first quarter.
Yes, thank you, Mr. Chairman. I'm going to start off talking about our statement of net position. I'm going to just focus on the highlights. Our quick ratio as of June 30th is 7.78. This is an increase compared to June 2022 when the quick ratio was 4.14, so it's almost double. Our current assets have increased by 8.7 million or 20% compared to June 2022. Cash equivalents and investments increased by 57%, and this is due to the lower receivable balances and investment interest earned. This favorable cash position allows for the investment of idle reserve funds in our treasury bills, which are earning a higher rate of return than the money market accounts at this time. Receivables have decreased by 30% or 3.8 million, which is a net of the new GASB 75 lease receivable and the overall decrease in grant receivable. Current liabilities, accounts payables and accruals decreased by 73% or 3.9 million, and this is primarily due to the decrease in grant payables. We had a very large bus purchase in prior year. Accrued salaries, liability, and benefits increased by 8% or 180,000, and this is just due to increases in vacation, sick, and pension accruals. Those can fluctuate depending on people take time off. Estimated claims payable increased 900,000, and that's due to the increase in the IBNR at the end of March 31st, 2023. Any questions on the statement of net position?
Just for the table, INVR, just so everybody understands what that is.
Oh, yeah, incurred but not recorded.
Just so
It's another type of a accrual. Moving on to the statement of revenue and expenditures as of June 30th. The consolidated operating income before capital contributions and non-operating expenses is $2 million. Operating revenues are currently on budget and 11% over prior year. Our regular fare box revenues are on budget and 46.9% over prior year, and that's due to the increased ridership at this time. There's been a 14.1% increase compared to prior year. And our pass sale revenues are also trending over budget and prior year due to the increased vending machine sales. These are TVM machines, and increased pass sales to medical answering services. Special line revenues and advertising and other revenues are just trending on budget and on line with prior year. Operating expenses are 3.2 million or 14.8% under budget and 2.8% over prior year. Salaries and wages and other employee benefits and payroll taxes are 11% under budget and 13% under prior year, and this is due to our open positions for bus operators and our buildings and grounds technicians. And that's also the reason for health benefits are 20% under budget and consistent with prior year. In current year, there are fewer claims and fewer services reported to UMR in current year. Workers' comp is on budget, 17% over prior year. This is due to the increase in reserves for 2 claims in May of this year. Pension benefits are trending 25% under budget. Pension contributions right now are based on budget, but once we get our actuarial report in August, we'll be truing up to the recommendations. Risk management is 18% under budget due to a credit we received for claims in prior year, and we are 11% over prior year due to increases in legal fees. Our purchase transportation line is 16% over budget and 40% over prior year. Currently, our purchase transportation vendors are providing 90% of the service requested. This is an increase of 17% over prior year. These increases can also be attributed to some unbudgeted and unanticipated contract rate increases. Materials and supplies are on budget and 19% over prior year. This variance over prior year can be attributed to increases in cost for our bus parts. Services are 35% under budget due to a number of factors. The cancellation of the peace contract, also budgeted services for consulting, advertising, marketing, and engineering that are anticipated but just have not been realized at this time. Fuel and utilities, they're both close to budget and prior year. And our other expenses are 26% under budget and prior year, and that's just due to primarily budgeted conferences and travel, which has not realized at this time. Any questions on the expenses? As you can see, we're 14% under budget, but consistent 2.9% over prior year and 1.4 over fiscal year '22. So the trend is pretty flat.
Are we making any adjustments about this purchase transportation? I just think that that's ridiculous.
Well, we will once we hire more operators.
And I'm just gonna say for the record, not all of our purchase vendors, I would rather be on a call bus than with some of those purchase vendors.
And I'd rather everyone on a call bus too.
We had something that we actually talked about yesterday because of the labor shortage. We want that internal too. All of us do.
It's just the difference in how they are supervised with the training and the rules. At least twice a week on a purchase transportation, I have to remind people, seatbelts are to be used and everything else. So I am the call bus cop.
Yeah, and the challenge we run into, Tina, is when we're assigning the routes or doing the signups, we can't farm out our fixed route service.
Yeah,
So we have
I
to
get
use
that.
we have to use the existing operators that we have for that service. And then we can farm out or we can use the purchase transportation, to make up for the shortage of bus operators.
I know,
You
we gotta
our
do what we
hands are
gotta
kinda
do,
tied
it's
right now.
just, phew. It's not,
But we can work with
Right.
the outside vendors.
yeah, believe me.
And I'll tell you, this authority's really tried to hire. I came up here personally on a Saturday when they were doing a recruitment day here. And Jackie and her gang and everybody here is really working hard. And I wanted to come up and actually see how they do this. And just the amount of people, you know, and somebody said to me once, Nick, where do you think the labor's gone? And I really have it, I figured it out, guys. Some aliens came down and they took everybody. It's the only thing I can think of, but no.
We've got another one of those coming up in September too.
Yeah, so really, Tina, great, thank you, and keep letting everybody know what's going on, I think it's
Oh,
important.
yeah, but there are a few drivers that say, oh, I've got the call bus cop. I said, well, I have
Good.
vested interest.
Yeah, good, no.
Keeping
Sharpens-
myself alive and
Sharpens
my.
them up a
fr-
little bit.
Yeah, oh, I'm tough. You wouldn't wanna
We
drive a
want you
bus
to
I'm
be.
on.
That's why you're here. Linda?
Okay, so moving on to non-operating revenues, they are 7% under budget and consistent with prior year. Our operating assistance is 9.7% or 1.6 million under budget. And in line with prior year, an increase in STOA has resulted in reduced need for our federal operating assistance, which we draw based on operational needs. Mortgage tax revenue is 4.5% over budget and 21.7% under prior year. The recording of mortgage tax receipts is trending under prior year, and we've all seen that within the real estate market. Investment revenue is currently $214,000 over budget and $240,000 over prior year. We didn't begin investing into treasury bills until September of 2022, so the comparison to prior year is very high. Our investment report, as of June 30th, the money market, unrestricted and designated reserve cash balances are 21 million.
Right, and once again, I think Linda and Melissa are doing a good job in really working the investment part, especially with the good rates that the treasuries are giving us. And
Yeah.
we're seeing that, we're realizing that, that's free money out for us.
I mean, M&T has increased our money markets up to 3%, which is great. But we can still, as you can see here, the treasury bills are earning much higher rates.
If you remember back a couple of years ago, that was 0.05%. Which is, it costs more to print the statements than we're making on the account.
The fees were more than
Yeah.
you're making.
Yeah.
So as of June 30th, we have 12.2 million in investments, and the anticipated yield at maturity is 258,000 at this time. This next slide is our mortgage recording tax statement. We're close to budget, $530,000 under prior year. We anticipate the real estate market would continue to cool, so this is what we were expecting. We wanted to show you the 5-year trend in MRT. You know, even though it's gone down, we're still much higher than fiscal year 20 and 21. Any questions on the mortgage tax? Cash flow statement. As of June 30th, our total cash on hand is $20 million. Invested reserves is $15.6 million. All sources, $35.6 million. And just so you know, you see the $20 million in the general fund cash balance at the end of the period. What you should know is that every month, on an average, operations cost us anywhere from $7.7 to $7.8 million. So that $20 million is a quarter's worth of spending, and that includes the STOA in that quarter. So it's just so you know, yeah, it looks like a big number, but that's going to fund our operations and it's needed.
And STOA is included.
Yes,
Yep.
we actually received it in May, so you'll see that under the operating assistance line. It's included in that $13 million. And that's it for financial statements.
Any questions for Linda? Very healthy report. Good managing as we prepare for future years. Okay, anything else, Linda?
Not for the financials.
Okay, with that being said, I'll need a motion, bring this to the full board. Julius, second, Robert, any questions? All in favor? Aye. Okay, moving on. Linda, some signatories on the resolution?
Yes, I'm asking the board to add 2 more signatories to all of our M&T accounts and our JP Morgan Chase accounts. We're adding Raman Azria, our Associate VP of Operations, and Bruce Fong, Assistant VP of IT. This is in preparation of the retirement of Joe DeGray and Mike Fitzgibbons, who were current signers, so they will need to be removed. So we're asking permission to add them.
Any questions? Motion? Monty, second, Robert, all in favor?
Aye.
Okay. Resolution 3B, Chris. We're gonna talk about ticket vending machine replacements.
Morning, everyone. This resolution is for 2 ticket vending machine replacements, or as we call them, TVMs. The current vending machines at the Syracuse Hub and the Utica Hub have reached the end of their useful life. Actually, at the end of this current year, 23, the APIs on the current machines will be unable to process credit card transactions, deeming them essentially unusable. So we need to upgrade those, or replace them, I should say. Pricing was received from Genfair in the amount of $107,824. That's for the machines and the install of them at both hubs. That will be paid for using 100% New York State grant funding. Genfair is our current provider of automatic electronic fare collection system. They're also the manufacturer of these TVMs that work hand in hand with our existing system, classifying this as a sole source procurement. Therefore, it is our recommendation that we award the contract for TVM replacements to Genfair.
Questions for Chris?
So the one with the Genfair?
Yes. Yep, they'll both be Genfair.
They're gonna do it before December.
Yes.
Before the New Year.
That's the hope. Once we place the order, we're gonna figure out lead times with them and installation
Yeah,
dates.
that's when I go on to the hill, I see a lot of times those out of oil or something like that.
Right. We've had difficulties getting parts for the current ones, so we're hoping that getting these newer ones will be a lot easier to be able to repair them when that time comes.
Collect the money.
Right.
Any other questions for Chris? Motion to award contract for Genfair. Tina, second. Darlene, all in favor?
Aye.
Okay. Okay, we're gonna stay with resolution 3C, contract award for a change order of 57,000 odd. I just wanna advise the board, sometimes in construction, as things come up, decisions have to be made on the spot after well thought out with good intelligence. At that point, when this was uncovered, I'm familiar with this because I build a lot of things at the college, a lot of projects. So I get a text, call me right away. So I always say, oh, I hate those texts. So Brian and I went over this in detail, what had to be. I authorized as the chairman for this change order because of where we were and how things were moving that day. But we have to bring it back to make sure we memorialize that, so I wanted the board to know that. Chris, I'll turn it over to you.
Thank you. So, yes, this resolution is for a change order. The original order was brought at the last board meeting. Caitlin presented that. That was for the CNG engine overhaul of engine number 2 in our facility downstairs here. Once Milton Cat was on site and really got into working on the overhaul, they noticed that the engine block of engine number 2 had been eroded and was seriously in need of repairs before they could move forward with the overhaul. The pricing was received for Milton Cat in the amount of $57,310. This will be paid for using 100% state grant funds as well. Milton Cat is the manufacturer of all 3 CNG engines downstairs. All repairs and services have to be done through the original equipment manufacturer, deeming this, again, a sole source procurement. Therefore, it is our recommendation that the board approve a retro award to Milton Cat in the amount of $57,310 for the repair of the engine block, so they can get the whole overhaul complete and finalized.
Is this a repair or replace?
This will be a
To
repair.
rebuild.
Is it going forward cheaper to replace it? I mean, I know it would cost more, but does that make sense to replace it versus repairing it, is my question, I guess.
Correct. There were a lot of meetings about this, and it was deemed more fiscally responsible to repair it versus replace the whole thing. So we're gonna be sending the whole unit, I mean, this is a giant unit, it's about 10,000 pounds, to CAT, which I believe is in Buffalo, New York here. They're gonna remachine the whole entire thing, put inserts into it, ship this back to us, reinstall it, assemble it here on site, and then continue with the overhaul.
Good point, Monty.
So there's gonna be a warranty on the repair, what can be done here?
I would hope so.
It's about a year warranty, but after that.
Lifetime.
It's, yeah, we're on our own, we'll be repairing it ourselves, and we do that from time to time. We maintain those engines.
So if there's 3, how are the other 2?
Exactly. Well, we're gonna only keep 2 of them, and then we're gonna go with an electric skid. So we're gonna replace one with an electric skid, but the other 2 will get refurbished, and they'll be good to go for 10 to 12 years.
We're considering that in the specifications that we're writing right now to put out in the near future here, hopefully, to rehab the whole facility. So those will be accounted for in those specifications.
Good work, guys. Motion. Luella, second. Monty, all in favor? Very good. Good job, Chris. Good job. All right. Anything else, Linda?
Were we doing the workers' comp reserve in this meeting?
Jackie's gonna, yeah. Jackie's gonna do workers' comp. This is an add-on to the agenda. We just had the meeting on Thursday with our workers' comp broker for the renewal for this coming period. It starts August 1st. That's why it wasn't in your board packet originally. But this is what I emailed out to everybody on Thursday.
Yeah. You know, before you get started on this, why don't you comment, Linda, on people, how the numbers have been reduced in workers' comp from participants?
You mean Jackie?
Jackie.
Yeah, that's Jackie's.
I'm sorry. I gotta keep everybody straight at my work. I keep everybody's name here. I'm all over the place.
I thought you were talking to me.
Yeah, I
but-
was. That's all right. I gotta slip up sometimes. Not too many times, though.
So, I mean, the numbers technically have gone down because our payroll costs have gone down. But they've also gone down based upon the amount of time that employees have been out of work too. So because our numbers have gone down in the fact that our employees are getting back to work sooner, we're not incurring as much expense as we used to, so.
It's your show, go ahead.
So good morning, everyone. We just met with Brown and Brown yesterday to go over our renewal costs for Travelers Insurance. As you can recall, this is a deductible program where the first $150,000 Central pays per participant, and then after that, Travelers picks up the expense. So for renewal, what they have proposed is, last year, our total premium cost was 1.57. This year, they're proposing a renewal at 1.47, which is approximately a decrease of $106,000. The other thing is we hold a reserve for, or cash collateral is what they call it, for any claims that we are paying out at the time. That cash collateral last year was 1.83. This year, they've decreased it to 1.68. So we're looking at a cost savings of $150,000. So overall, we're looking at approximately a 7.5% decrease, and $256,000 cost savings for the same coverage. Yes. So we're doing well. I mean,
Questions?
you don't see decreases in workers' comp too often, so.
And our cash collateral used to be teetering around 4 million,
Yes.
so this is.
Yes, we've
great.
improved over the years. I mean, when we started in 2015, yes,
Yeah.
it was at like 3.5 and it went up to about 4 and then now it's coming down. A lot of that has been the help of, Brown and Brown as our broker to really get on us, setting up a light duty program to get people back to work sooner. And quicker, where we're not paying as much workers' comp out to those employees. So,
Any other questions?
What's the coverage on, year over year? The wage base that you're doing this off of? About the same?
It's gone down a little bit. Our aggregate payroll, so it was 34.9 million last year. It's based off of 32.6 this year. So about a 6.8% decrease.
Okay, any other questions? Motion? Robert, second. Darlene? Any questions? All in favor? Aye. Okay, thank you.
Thank you.
Good job with that, very good job.
Thanks.
Linda, anything else?
The last reports are just the procurement summary, the capital program summary, and risk management summary, which is in your board report. Other
Very
than
good.
that, there's nothing else.
Okay, we'll take 5 minutes. Is this a resolution or is it? Everybody's in a good mood, I like that. That's good, it's Friday. Good weather. All right, let's start with the Pledge of Allegiance, and Mike Fitzgibbons is gonna lead us today.
I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Quorum is present. Next meeting date is August 25th. Be only an Audit and Finance Committee at this point at 9. Need a motion to approve the regular minutes of June 23rd, 23.
So moved.
I got a question. I know you're online, but were you part of the meeting then, or didn't he call in last meeting?
Me?
No.
No,
Tony.
the only thing I did, I called in for a portion of the meeting.
Right,
That's
so
all.
are you considered that, you're marked absent, that's all I'm saying, so.
Yeah. He was only on for the Personnel Committee.
Yeah.
Okay.
Yeah,
Executive
yeah.
session at the
Right,
beginning.
Yeah.
Okay.
Thanks, Monty, appreciate that. Thank you. So a motion, Monty made the motion, second. Darlene, any questions? All in favor? Aye.
Right.
Very good. Okay. At this point, we want to honor one of our longstanding employees who's at this meeting every month. And Mike Fitzgibbons started Central 25 years ago as of yesterday, which we talked about as we shared our little barbecue. And at that time, he was a network administrator in our IT department. As Central grew and became more dependent on technology, Mike advanced through the ranks in the IT department from manager to senior director and now vice president. Great succession, great moving up the chain there. Mike has led the team to implement some of the latest technology you see us using today, right here in the boardroom, as we can all see, and helping us to achieve our sustainability goals. Mike also played, I think, a key role with the pandemic on how we really relied on technology there. So, we all appreciate that. That's something you don't get trained for. You just have to react to what the situation is. Mike has been a great asset over the years for the authority. We wish him the best in his retirement. Personally, Mike, I've worked with you for 18 years, and you've been nothing but a gentleman. And I think what I see, and I know the board sees, is the passion that you have for your work. And that's something I think today that we lose in society, passion. Please join me in congratulating Mike on his retirement for just 25 years. We wanted to hold his, we didn't want to acknowledge him yesterday with his pin, so he's also going to get that today too. Almost done. A few words for the group.
Yeah, sure. It has been a great 25 years, worked with a lot of people who've gone through this process. Talking about sustainability, employment here has just been wonderful. Working with people like Linda and Jeff and Joe DeGray and the whole group of people. But I couldn't have done it without the staff, the IT staff, Tom and Bob and Carlos, and now Billy's gonna be part of that, Jim Anderson, and even Bruce coming in on the team itself. We talked about the whole pandemic kind of it. Those guys really did it all on their own. They really did. It was all them. So thank you very much. But people always ask you, week of last, what are you going to do now? You got plans. Barry's back there saying, you got plans? Well, yeah, we got plans. Okay, so my wife says to me, you got a BHDs and we're gonna do some DTs, and you got, oh, and this last week, CCS. So being an IT guy, I gotta leave you with some of those. The BHDs are, can you imagine this? Husband to-do list, DTs are day trips, but the ones this week are the ones that got me the most. She's giving me a chart of chores that start on Monday morning.
You can tell it's an IT family because people, he gets a chart, we get lists.
Yeah.
So you know it's different, okay?
Well, thank you, and thank Central for everything that's happened over the last 25 years. It's been a wonderful career, and it's, you guys have got a lot of good things going on in the future, so congratulations and good luck. Thank you.
Thanks, Michael.
Thanks.
Okay. It's becoming too much lately, all these retirements. We're gonna have to slow things down a little bit. Okay. Brian, we're gonna get into your report.
Thank you, Mr. Chairman. I too would like to just take a minute and thank Mike for all his years of service. Working with him for the last 20 years, you could just see how much he enjoyed what he did, and his leadership ability in the IT department helps us every day and really put us where we are today with cybersecurity and trying to keep ahead of everything, which as you can know, technology, you can implement something today and it's obsolete tomorrow. But he and his staff have done a fantastic job in keeping us up to date and safe, so thank you, Mike. My written report was out in the board packet. We've expended about a little over 17 million of our ARP funds out of the 38.5 that's available. We do continue to draw down on that monthly. BRT, June 27th, myself and central staff met with city officials, discussed BRT and our access to traffic signal prioritization. That's the system that allows emergency services vehicles, currently only the fire department, to have access to traffic signal prioritization. What it would do on our side is we wouldn't have the same level that the fire department has. So if a fire truck's approaching a red light, they've got the indicator on the fire truck that turns it green so they can keep going. We wouldn't have that, but what we would have is a different level of prioritization, so that if a bus is approaching a green light that's about to turn red, it's going to hold that green for us for a couple of seconds so that we can get beyond the green and get to the stop that's right there. It's an essential piece to BRT. The city's aware of that, and for the first time in history, the fire department is giving access to other organizations, giving access to the TSP, so that's really good news.
Did they say yes?
Yeah, they did. Mayor Walsh, when I met with him back 2020, we started talking about BRT and access to this, and I told him what the importance was, and that over the years we couldn't get access to it because the fire department controlled it, and he just looked at me and he said, well, the fire department works for me, so you're going to get access, which was great news, and so that's moving forward. Public hearings on June 28th and 29th, we had a series of public hearings regarding some of the routes that we have eliminated over the last couple of years, and this helps us as part of our process to make them permanent. I want to thank Steve Cagle and his team, Brent Dice, Paula Catrone, Lynette Pitwano, Rachel Bachman, Casey Brown, for their efforts in organizing and hosting these events. They were very professional. We had the chairman joined us for one of them. Julius joined us. Very professionally done, and I want to thank Steve's team for that. We continue to have very program, several NIPTA meetings, storeroom procedures, SMTC, IBI. So we've been really busy over the last several months trying to get all of these new initiatives off the ground, including BRT, on-demand service, bike and scooter share. So we just wanted to mention that. Had a great RPM event yesterday that Chris is going to talk more about and share some information. Again, the chairman joined us for that. These events keep getting bigger and better every quarter. And then lastly, if you didn't see it on your way in, you want to take a look on your way out. On the outside of this wall right here, we now have a map. We have a diagram of New York State on there without the counties that we represent. So thanks to Lynette and her team, they got that. Okay, great. Moving on to senior staff reports. Christopher.
Thanks, Brian. Good morning, Mr. Chairman. Good morning, members of the board. A little bit of a lengthy report I kind of have today just to go over some things and some fun things we've done in the last couple weeks. But first I want to start out and inform the board. Last month I notified you that the new fare boxes were going to be installed at the beginning of July. So as of last week, the fare boxes have been completely installed in the fleet minus one bus, which is out of service right now. So until that's available. Right now we're working through some of the kinks of just programming, making sure everything's functioning as it should be. As if the fare box was the same fare box from before. And then as we get through the fair in September, as we talked about, we'll start turning on some of the additional features that are out there. But as of right now, we're making great progress on it, and the install is complete and done. The faults have been upgraded, and a lot of positive feedback so far on the functionality of the new equipment. So we'll continue to keep you updated on that as things progress, but just wanted to let you know that happened. As Brian mentioned, the RPM program, so this week what we call the RPM Roadshow, Brian, myself, Susanna, who is a key proponent in calculating all the data that generates the RPM awards, traveled to Oswego and Auburn, Utica, and then here in Syracuse. And those trips, we recognize individuals for years of service, not quite as many as Mike, but several 135. We did have a couple other 25s with Jackie Musango as well this week, but we also recognized an individual out in Utica, Manny Kotrich, who's a 23-year employee out of Utica. He was a union steward for 12 of those years, big proponent working with central management out there and us here to get Utica up and running. As we know, in 2005, Mr. Chairman, you're well aware of the goals we had. And from the union's perspective, he was a great advocate for those individuals out there. So we recognized him in Utica on Wednesday as our operator of the quarter. Very appreciative with the staff out there. We did a cookout with them. I think we're gonna have a laundry bill from Casey Martin, the director out there. He didn't bring an apron, but he was covered in grease from head to toe in his cooking event. But it was fun. It was well received. A lot of fun to interact with those individuals.
Well, he really was covered too.
Yeah. Yesterday here in Syracuse, we recognized Al Darwish, another 24-year employee, also a union representative. He's the secretary, Frank, right? Recording secretary for the union here in Syracuse. Great advocate for the maintenance individuals as well as the union individuals across the board for Oswego and Auburn and Syracuse. So we recognized him yesterday at the event here in Syracuse. And also at the event, to just give some highlights, we partnered with Honor Flight, and we've done several events with them. If some of you guys are aware that we do shuttle service at the airport, they do 2 missions a year, and those missions are veterans from World War II to current, so Korean War, Vietnam War. They, free of charge to the veterans and either their staff or their volunteers that help these individuals get down there, to fly to Washington, D.C. and take them around Washington, D.C. to see the memorials. So they partnered with us on doing that in the shuttle service, and now we wanted to partner for them. So we had a little fun last night with a dunk tank. We called it the Boss Wash. Several executive staff members, Brian, myself, Jeff Hoff, Raman, Josh Gardner and his team, Susanna jumped in it. And it was a great event. We also partnered with the Syracuse Mets to kind of throw out the first pitch, so Scooch was here. So there's Brian and I getting in the event there. Brian hopping in the dunk tank. So Scooch and the Honor Flight folks for the partnership. It was very well received. We raised, do you have the number?
$674 for Honor Flight.
Just from staff, dunking us. We had a great turnout of staff represented with Scooch and the Honor Flight team. A lot of fun, very well received. We also did a cookout here, so the executive team, everybody kicked in to set up the event. We were here till about 8 o'clock last night, 7:30, 8 o'clock, cooking for second shift as well. But it was fun, a lot of fun had by all.
One thing we did learn is we will not be putting together a baseball or softball team based on the throwing ability that we saw yesterday. But it was a lot of fun.
Yeah. So it was a lot of fun with that and that great partnership, and just in the $674, it allows at least one veteran to participate that may have never been able to go on the trip. So it was a lot of fun.
I spoke with Dan Cummings was here as well. He's a board member for Honor Flight. I've known Dan for years, and I was telling him, I asked the ladies that were working the table, they said, we're right around 500 or so. And he said that's enough to pay for one of the veterans, because the veterans don't pay. Honor Flight raises the money. He said, so that will definitely cover the cost of one of the veterans, heading back and forth from Syracuse, so it's great news.
What do you think the oldest Honor Flight person was that they serviced?
There was a World War II vet.
Yeah, they have guys in their 90s.
Yeah.
103.
Yeah.
103?
Yeah.
Whoa.
Yeah.
They
One of my neighbors
consistently have
went,
guys in their 90s that go
He's
down.
97.
Uh,
My mom's 95.
Yeah, and they do, so as some of these veterans came back from war, they didn't get a welcome reception. So they host that at the airport for these individuals coming back. I know Jackie and her husband Chris participated in that. They asked us to participate in that event. So, as we get more, we can certainly share that. We also participated in the CNY housing event, marketing, HR, there we go. Marketing and HR participated in there to speak with attendees about career opportunities, the transit service, our Go Central Bus app. Several questions, well attended. Very happy to participate in that event. The green bus in the back is our recruiting event bus. So it was a good turnout, and we look forward to participating in similar events and continuing those events. And that concludes my part of the report. I'm going to call Josh Gardner up to this quarter is the quarterly Call of Us report, so he can come and give you those highlights there, and then talk about the ADA anniversary march.
Thank you, Chris. Good morning, Mr. Chairman. Good morning, Board. So this was the end of the quarter for us, for Call of Us. In your packet, we sent it out a little bit late. It was your quarterly report. Call of Us ridership continues to see double-digit increases. Ridership is up 18% over prior year. One good thing to note also is our telephone access. Our calls answered within 2 minutes increased 17% from last quarter. That's due to 3 new hires that we brought on in February and March. Tina knows one of them very well. They've been doing good, and as they continue to get up to speed, we'll see that number increase. Then as Chris was talking about, on Wednesday the 26th, we also participated in the 33rd anniversary of the Americans with Disabilities Act Celebration March, along with dozens of community organizations. So this is them here. Call of Us provides a bus, so that way anybody that wants to attend the parade that may not be able to make the walk, or with the heat, because it is a little bit of a walk, they can get on board the Call of Us vehicle and still attend the parade and be a part of it.
And several of our ATAC committee members, so right in the front of this picture is Agnes, and Beata was in the previous picture. So they were well represented on our ATAC committee as well. Any questions for Josh or myself on the reports?
Josh, how well is handling these double-digit increases? Because these are the things I hear. People, sometimes they feel frustrated, sometimes they don't.
I think we're handling it well right now.
I think so.
If you look at our on-time performance, it is down a little bit. But overall, I think we're handling it well. It's not a huge decrease in the on-time performance. We're handling it well. If you notice, the
access to the calling in increased as well,
Oh,
the telephone access,
It's
which I
it's
think is
getting
the
better.
hardest part, yeah.
Yeah, that's where people are most frustrated.
Yeah.
And
that-
I have to take credit because the person I know did all my Colobus reservations for me, so she came to you pre-trained.
She did, she's been fantastic. So, yeah, I don't see a huge drain on like the customers, especially now that we've increased how quickly we're answering the phones. There probably is a little bit of wait, sometimes depending on how busy it is. But if you notice, there was no denied trips for this quarter. We're still
The
doing.
complaints I hear about is people being on hold a long time on the weekends, their bus hasn't shown up and they're calling. And I know one day I was on hold for 40 minutes.
On the weekend? So we have increased weekend staff.
Okay.
And we're actually just last week, one of the people that started in March went on to Sundays to help with that call volume as well.
Awesome.
So yeah, so we did add an additional person on the weekends to address, because they were longer delays on the weekends, so that's why we added the person.
Excellent.
One question, Brian, you mentioned about the thing, change the light and stuff like that, they're gonna be considered with the call of us also, just in case when you get in a hurry, like.
Yeah, traffic signal prioritization. I don't think we're doing that on the call buses.
No, it's gonna be primarily the fixed route.
Yeah.
Yeah.
And it's, with call bus, we don't, our drivers are good and they try not to take the major roads, because that's usually where traffic signals are, because they kind of know the back roads, they'll get you there a little quicker. And they're not on a set route, so they're allowed to take, shortcuts, things like that, so.
Right.
Yep. Any other questions?
Thanks, Josh.
Thanks,
Nice job, Josh.
Concludes our report.
All right.
Good job.
Jackie?
You pick your name or
What's it?
No, they're just teasing me, like normal. Good morning again. So just an update on our operator class that we have going on that started on June 26th. We now have 6 operators or trainees in that class. This past week, 2 of them took their road tests and passed, so now all 6 of them are licensed and will be going out with the drivers to train on the routes and everything on this upcoming week. So hopefully we'll get them turned in probably by the fall sign-up we're looking at. And we will be also hosting another open house, which will be the first weekend in September. So we can start recruiting for a new class to start in October.
When you say fall sign-up, that they would drive in the fall?
Yeah, the fall sign-up, the operators sign up 3 times a year on different routes and everything.
Yeah.
So the fall sign-up starts right after Labor Day, so. Also, we have a wellness fair that'll be going on. Central is going to be hosting a wellness fair on August 8th from 10 to 3 p.m. for all our employees and retirees will be invited to attend. There are going to be over 15 vendors on our property. There'll be various topics relating to health, nutrition, financial planning. So there'll be a diverse group of vendors here. We're also going to be having some giveaways and raffles for everyone that attends. So we're looking forward to that.
So, speaking of the wellness, they're gonna include, the drivers to be able to get to a certain preparation area also? Does that make sense?
What do you mean?
A lot of times they sit behind and drive the bus for so many hours, and they need to have exercise and stuff like that too, right? Gonna be part of that?
Yeah, we're gonna have, like, Onondaga County, is gonna come down the health center there, and they're gonna give different tips on nutrition and probably like exercises and that. We also have done in the past where drivers, we've given them lap bands and everything to do stretches and exercises during their time at the end of the line. Or we just tell them to not only get up and move, but some will walk around the buses and everything just to kind of keep moving. So they'll have little tips like that there. Okay. And lastly, we're going to be conducting mandatory harassment training and ethics training for all the employees next week. We've invited Mike Dodd from Ferrara Fiorenza to come to present the updated changes in the harassment regulations to our staff. And afterwards, HR staff will be presenting the ethics regulations to be in compliance with mandatory training that we have to have in person every other year. So that's everything at this point in HR. Any questions?
Thanks, Jackie.
Okay, thank you.
All right, and Bruce, first time at the table.
Welcome, Bruce.
Good morning, everybody. Brian, Mr. Chairman. Originally, I was gonna do my briefing based on notes I had on paper here, right? But the comment was made, how amusing would that be, being in a room full of all this technology and the IT person is reading from a piece of paper? Well,
First time up, it's okay.
You get a pass, you get a pass
Yeah.
the first time.
You don't know what you know.
Well, as everyone may or may not know, technology could be finicky, pen and paper never fails. So, anyways, again, good morning. It's been 7 months since I first sat in this seat when Mike Fitzgibbon introduced me to the board. How time flies, 7 months, and I wanted to personally thank Mike for everything he's done to bring me up to speed. The company's losing a lot of institutional knowledge there, and I got him on speed dial. Anyways, my first several months here, I was taking trips around to all the remote locations, getting the lay of the land, taking notes, and out of that came some, initiatives I'm looking to engage in, physical infrastructure upgrades, and revisiting a wireless project that was started several years ago, but was unsuccessful, so we're trying to look at that, improve that. I've also been looking at internal processes and ways to improve and streamline the department. Over the past month, we had some firewall upgrades that we did at the RTC and here in the main office. We had a kickoff meeting with Trapeze on the implementation of the RISC program. That's the Risk Incident and Safety Compliance Program. And part of that discussion involved integration with our HR program, PDS, which would alleviate having to manually input users into the system. We also held a meeting with key members of the cybersecurity team where Carlos, our cybersecurity administrator, laid out the cybersecurity framework, and that we're going to be following in our way forward with that. Currently in the works, we're going through a Cisco phone upgrade. It was a 3-stage process. We completed stages 1 and 2. Stage 3 is going to be happening sometime next week. No issues so far with the upgrade. We're also in the final stages of evaluating an AI-driven program that's going to help us with a constant onslaught of spam and phishing emails. It was about a 30-day trial, and the results we're seeing are looking really promising. We also have a proof of concept mobility device being field tested by an ops supervisor. If this turns out to be successful, we'll give the supervisors access to programs such as Trapeze and Clever devices while out there on the road. On the horizon, as was mentioned last month, Windows 10 is nearing end of life, so we're in the initial planning stages of rolling out Windows 11, but we need to do some internal testing to make sure that work through any potential issues. To prepare the end users, I'm going to be looking into some short training videos to help us ease with that transition. And also, we're looking at upgrading one of our management systems. The key point of upgrading this system is going to help us with the rollout of Windows 11. My final thought here, as priorities go, mine are cybersecurity focused. My job, as I see it, is to provide Central with the technology they need to fulfill their business objectives in the most secure manner possible. And this can only be accomplished with the support of everybody, because at the end of the day, security is everybody's responsibility. And that's all for my report, unless anybody's got questions. Yes,
Yeah,
sir.
speaking of wireless service, have you had a chance to visit GLE?
I have not. Yeah, that'd be a stop, that'd be a stop for me. We'll take note of that. Thank you.
Good job.
Anybody else?
Good job. Thank you.
Thanks, Bruce.
Wait till your second time at the table.
What's that? Yeah.
Wait till your second
True.
time.
Jeff?
Thank you, Brian. Good morning, Mr. Chairman. Good morning, members of the board. Last month, E.J. Moses, Mike Rice, myself attended, and Josh Kidder and myself attended the East Coast Clean Bus Conference, which included quite a bit of agencies from across the nation and power companies and school districts. So some of the takeaways that I saw, Rochester Transit got up and did a presentation in regards to their transition to zero-emission buses. They started off with electric buses and didn't quite work out for them, so now they're going towards hydrogen fuel cell. That became a very common topic throughout the conference. In addition to that, when the power companies got up to discuss, people are asking questions, is the grid going to be able to hold everybody be able to power their buses in addition to cars, homes, and things like that? We're thinking, hydrogen fuel cell is the way to go, and pretty much all the other agencies are feeling the same way. The power companies said they're taking this information back and talking to their staff. So it was a very good conference, just like most. A lot of good takeaways and a lot of good connections. Now the next thing I want to talk about, unless anybody has any questions, Brian, I actually talked to Monty and Julius here about doing a tour downstairs, if you're good with that.
Yeah, absolutely.
And I'm gonna extend it to anybody else, if anyone else go down and look at the engine room. Now, this is the engine that Chris King was talking about. It's been taken out and it's been sent to Buffalo. So this engine is 5 tons, and as you see, it's, when we go out there, I can show you a little bit better how it works, but I'll bring staff out there too. They had to slide this out and put it on this ramp here. So they got rollers and everything underneath this, and they're moving it out. You go to the next one. You can see where it's going. That's our. I don't know. You've gone too far, right? Anyways, they pushed it all the way out. There we go. You can see the rollers underneath this, 10 tons worth, and they have to slowly move this out to get it onto that ramp. Keep going. And there, it's all the way out off of the skid. Then they got the blocks on here. As you see, they positioned the thing very well. Next one. Then they started moving it out. Keep going. There's the door it's coming out of. And you can see the size of the engine there to the door. And they had to get this thing moved down again. Next one. So they were shifting it down. And then the next one. Then they had to get it on the forklift and they put it on the back of the trailer. And now it's off to Buffalo. Mike Rice just sent me a message. They say it's in the shop. They're going to be milling it. It's going to take about 5 days, and they're going to send it back to Milton Cat and reassemble it.
Take that whole apart, right?
Yeah. They got the what is the bottom block is off. They shipped that back. They got the rest of it. They're redoing on the top. So, like I said, if anybody wants to, they can come down to take a tour afterwards. Any questions?
Thanks, Jeff.
Thank you.
Thanks, Jeff. Good job.
Raman?
Thank you, Brian. Good morning, Chairman. Good morning, members of the board. So I mostly have updates today on previously announced initiatives. First off, our 2 senior supervisor positions that were announced in previous months. Those 2 people have started and they've really hit the ground running. And they have already began what I mentioned last month, which would be a focus on process evaluation and improvement. So we've already started drafting new SOPs for every single position within dispatch, and hopefully in the next few months, every position within operations will have some form of SOP, which is going to be really important for not only training, but also business continuity reasons, given turnover and just the job market in general. So that will really help us out. We've also looked at staffing schedules. We've made some revisions to help us provide additional evening support especially. This is all being done with no cost increases, just moving some schedules around. Given ridership increases and increased vendor use on CallBus, and as was mentioned in previous month that there used to be some additional supervision on the CallBus side, we're gonna be working with our call bus team to increase our vendor monitoring. So we're hoping to ensure our vendors are really meeting our standards. And let's see, we also, Bruce mentioned, but we've also received a tablet computer that we're gonna be testing out in the field. Hopefully that'll help us improve communications and our processes in general out in the field. Right now, it's very paper intensive, which I mentioned previously. Lastly, we're now gearing up for the fair. We're in full fair prep mode. Earlier this week, we met with the fair team at the Joint Operations Center. We discussed various logistical and planning topics. We've also been hiring for the fair. We've hired about 25 of the 40 counters that we'll need, so we're right on target and we'll be ready for the fair. So, that's pretty much it.
Any questions for Raman?
So, you're just getting tablets, before that it's just keeping paper in?
Everything has been traditionally paper-driven. We have one tester tablet right now. We're going to be really evaluating it, seeing how well it works out in the field. You know, it's a mobile cellular connection, so we're not really sure how well it's going to work, but we're going to give it a try. And if it goes well, along with the risk application, which we mentioned at a previous meeting, we'll be able to process full accident reports, monitor bus shelters and bus stops, do everything remotely, upload it, you know, through the cloud back to our offices here. Okay.
Thanks, Ryan.
Thank you.
Spend the money. Yeah.
And then finally, Steve Cagle is off today, but Bren and Paula are gonna pinch it.
Thanks, Brian. And good morning, Mr. Chairman and members of the board. I just had a couple projects that I wanted to update you on the progress. I recently attended a climate smart transportation listening session in Auburn, and it was really a good discussion on transportation issues in Cayuga County. The county, the city, social services, and regional planning were all in attendance. Obviously, Centra was there. And the purpose of the meeting was to inform DEC, who put on the program, about the needs and priorities of local communities so that state programs can be improved and new programs can be initiated. So we discussed smart growth mobility-oriented development, which promotes walking, biking, and transit. So obviously, Centro was a conversation. We talked about enhancing public transportation and mobility alternatives. And again, it was a really good conversation to have everybody at the table. And it was interesting because it split up, it ended up organically kind of splitting up with social services being at one table and some of the municipalities and Centro being at the other table. So it was a different perspective, right? So we got the needs and then the solutions at different tables. And then we came back together and said, how do we work together? So again, this was the initial conversation. The CNY Regional Planning Board put it on with DEC funding, and we're going to continue those conversations. It was good to hear some of their concerns and to bring them some of the initiatives that we're working on internally that we're hoping to expand into our other properties.
That is so important to get the community updated so there won't be no false information out there.
Exactly. It was a great conversation. So we'll keep doing that. Secondly, I wanted to give you the update on our ETT progress. Again, that's Exploring Tomorrow's Transit, and that's that year-long process of public engagement that we've been working on. I say year-long because that's what SMTC has signed up to work with us, but I'll be honest, we're going to keep this conversation going, especially as we're looking at Syracuse and Onondaga County and how our system may change in the future. We see the ETT conversations just really rolling into a potential system reevaluation and making it more efficient, right? So next up on the agenda is the community discussion meetings. That's the third tier. If you remember, we had some open houses. We had the survey that closed earlier this spring. And the next up will be these community discussion meetings. Those will happen at the September-ish mark, so we'll keep you updated as to when those are scheduled, but we're looking at really discussing what we've heard in the survey and what we heard in the open house, and how to then say, okay, we heard this, we need to break up into some smaller groups and get more details from the public, who are really the neighborhood experts as to how their community works. So that's our next step.
Just in Syracuse.
Yes, yep, that's here in Onondaga County. We're also planning to hold these meetings in several locations, so we hit every quadrant of the county. So we've got East Syracuse Free Library, we're looking at Salt City Market again, they were a great venue. And then maybe the Liverpool Library. We're also looking at options in the west and south, so we just wanna make sure that we hit every neighborhood area. And so far we heard people want more frequency, people are willing to walk a little farther for higher frequency service, and the locations where people want service are generally the locations we already have. So that's good news, right? We're doing that correctly. Now how do we make it more efficient? We're also discussing on-demand as part of the system redesign, and how would on-demand play a part in the service, and how would it balance out, as well as how do we make that work with our driver shortage. So lots of conversations going on.
That's why it's so important, even though you may have the service, but if the community don't know about them, it's not going to be good. But you need
Right.
to-
Yeah, and asking the right questions
Right.
that, we just want to listen, and that's where we've been up until this point, listening, and now we want to say, okay, this is what we heard, let's talk about that more.
Yeah.
So,
Were there any similarities from your Auburn meeting to your Syracuse meetings as far as the issues and or solutions?
there were, in Auburn, we haven't talked about solutions yet. We really talked about, a little bit of how Centro is planning, but that first initial meeting in Auburn was about issues and what they can do, what we can do to work on it. But there are similar issues all over the place, right? For us, we have the driver shortage. Do we want to work on coverage, or do we want to work on frequency? That's always a transit question. How do we balance making the service most efficient? And that's where Brian and you all have authorized this, exploring these other options, right? So bike share, on demand, some of these other things, to say we need to think differently maybe about
But those are our
transit.
issues, what about their issues?
Well, we're trying to solve their issues with additional options, right? Yeah, to give the community additional options, to say, if we're not where you wanna be at the time you wanna be, what if we change how we're there? Right? What if we make fixed route more streamlined? BRT is gonna make those corridors much more frequent, and then concentrate on demand in the more rural or suburban areas where they don't need super frequent. Because we know mass transit works best when there's mass. So, any more questions for me before I bring up Paula? Okay, so Paula,
Thanks, Fran.
thank you, is gonna tell us about the ridership, and again, her title is Service Development, Data Analyst, and Research Specialist.
Thanks, Bren. That's a hard act to follow. Good morning, Mr. Chairman and members of the board. I'm happy to be back with you today. I do share Bren's enthusiasm for public outreach, so I'm really excited to see what happens with Centro and our planning and service development over the next few years. So today I'm here to talk to you about ridership. System-wide, our ridership increased 3% compared to last June. Fixed route service continues to trend upwards, which is great. In Syracuse City, the service saw an increase of 14% in June. We did lose some ridership in the SU area, but that's due to the limited summer schedule that we're operating this year. SU is operating more of their own trolley service this summer. Across the region, we saw city ridership increases as follows: Auburn up 11%, Oswego up 9%, Fulton 41%, Utica 13%, and Rome 22%. Our amphitheater shuttle service has been very popular this season. for the Fish concert on July 23rd, we gave 958 rides, which is the highest number we've seen since 2019.
Good.
Yes, right? We should be excited about that, so we're rebounding. Yes. As you know, the shuttle runs from Warren Street across from the Transit Hub to the front circle of the amphitheater for all shows, except during the Great New York State Fair, which is fast approaching. So, during the fair, customers are going to take the downtown shuttle to the main gate where they'll board an Orange Lot shuttle that will take them to shuttle stop 4 for the amphitheater. And when the show ends, passengers take the Orange Lot shuttle back to the main gate and board a downtown bus. And I'm letting everyone know ahead of time in case you have any constituents or if you plan to take the shuttle yourself so that you know what's happening. One more friendly reminder that we are continuing to operate our seasonal service to the Lakeview Park and the main gate of the fairgrounds. We operate the SY 682. It has trips leaving downtown Transit Hub between 9 a.m. and 5 p.m. Saturdays, Sundays, and holidays. However, the service is suspended during the New York State Fair, in which time you can take the downtown shuttle. And that is all I have for the ridership report. Does anyone have any questions? Yes?
This might not be your department, but also you speak about SU ridership, you have your own shuttle bus and everything. Did y'all talk about, what's it called, those bikes that people rides, what they call those things? The scooter bikes and stuff like that. Did you talk about how that, was that part of your conversation too?
No,
No, that
Brent.
was. I keep forgetting what it's called.
The bike and scooter share.
Right, yeah.
Right? So we aren't tracking those yet because they started really late in the season, and then at OCC's campus, then school closed. So we'll start to track those numbers in the fall when school starts again, but we are looking at, expanding those areas. We've had some great conversations recently and thinking about the state fair. Are people able to use it to get there, to get to AMP shows, and having some conversations that I think will give people even more options.
One thing I'm concerned about, even though this is part of Central, and the state fair started, we have a lot of student probably riding them. Not only students, but people riding those things out to the state fair this year. Do you look at that, how that's gonna be, whether it's gonna be a problem or it's gonna be?
Actually, I talked to the VO folks this week. We actually noticed them, right? So our drivers and our staff have noticed them out near the state fair recently, and we were thinking about that. Hey, if there are scooters all over the place and we're trying to get buses through, how's that gonna work? So I brought that to Paul's attention, who runs the Syracuse system of VO, and he tells me that he was headed out there that day to pick them up and reallocate, and that he's going to be watching closely because he knows we don't want to get in the way of the state fair transportation.
Anyone going to the concerts, or those the only, so I didn't make it to it, and I forgot where you said your pickup stop was, but I'm on your way, you're not gonna stop for me, like, hey, I'm going to the concert. I gotta be at the initial pickup spot.
For the amphitheater concerts, for the Orange Lot shuttle, they're gonna pick it up at the main gate. And then it will stop at all the stops along the way through the Orange Lot. So if you parked and you don't remember where you are, you can just ride it around.
But it doesn't stop at bus stops, if that's what you're asking.
Yeah.
No,
It's a
not
direct
necessarily
shuttle.
bus, okay.
It's a
Yep.
direct shuttle
Shuttle.
from downtown to the fairgrounds.
Right. So from downtown, I can't be, I can't be on the other side by the mall.
Correct.
You gotta pick me up. No, okay.
No, but there's gonna be a shuttle from the mall.
Mall too, okay, all right.
Yep.
Good job, ladies, very good.
All right, thank you.
Thank you.
Mr. Chairman, that concludes my report.
Will you ride the scooter? I
Okay,
haven't ridden yet.
Going into audit and
That's when they
finance.
have time to, that's when they need to check on it, when we start riding
One thing, Julius, where do you park your scooter?
I have
Turn 'em on.
4 or 5 in front of my house usually.
You have a helmet, right?
Audit and finance. First thing that was presented by Linda, very healthy financial reports, very detailed. Like the new graphics by her and Melissa. Motion was made in committee to bring it to full board for adoption. May I have a motion at this point? Tina, second. Luella, any questions? All in favor? Aye. John Maloff gave us a presentation on the liability insurance and a little bit more information about what's going on in the industry. Motion was made to approve the new rates for the general liability insurance with, let me see, it was an increase of maybe $7,000 to $8,000 from prior year. Motion was made to bring it to the full board for approval. Julius, second. Monty, any questions? All in favor? Aye. Third, we had Jackie went over the workers' comp renewal. I see some good positive stuff there. I don't like to talk about it because it'll come back, so we won't talk about it. A motion was made to bring to the full board for approval. May I have a motion? Tina, second. Darlene, any questions? All in favor? Aye. Resolutions. Resolution 3A, authorization for additional signatories. Little housekeeping had to be done with the recent retirements. Linda brought that to us, so a motion to add the additional signatories to the bank accounts. Robert, second. Monty, any questions? All in favor? Aye. Ticket vending machine, Chris gave us a good oversight on what's going on there. And it's Resolution 3B, Resolution 3B to award contract to Genfair. Motion was made to bring it to the full board for approval. May I have a motion? Monty, second. Tina, any questions? All in favor? Aye. And finally, Chris brought us the CNG engine number 2 overhaul change order for around $57,000 that needed to be done at the time when it was being kind of opened up there. Motion was made to approve that and bring it to the full board for approval. Can I have a motion? Julia, second. Tina, any questions? All in favor? Aye. Okay, Brian, that concludes our audit and finance. Pension committee.
This morning, we had a pension committee meeting, and Lesko and Tim gave a in-depth presentation excuse me, of the portfolio and the risk associated with it. The numbers are very good. He did a very good job. No action was taken and no action is needed by the board. That concludes my pension committee report.
Thanks, Robert. The only thing under old business I want to say, yesterday I really enjoyed the day with the employee recognition. What has been put in place to recognize those employees, I think, is working. And it was a nice time seeing everybody. The whole team did great. I didn't know that we had, under other duties as assigned, certain talent in this room. We have people that could be a master of ceremonies. We have a couple people that are really good bun setter-uppers. We have a couple chefs that are in the room, okay? We have a DJ.
DJ.
You know that either.
We do.
We have a photo organizer or a cheerleader, we might call her. But we do have a lot of talent here. But it was a great day. I think staff really enjoyed it, and it's nice to see the success of the program with the decrease of probably time that maybe I think people are looking at the time maybe where they might have taken off a little easier in the future, but now there's something of merit to strive for, and I think on behalf of management and labor, I think it's working. So it was good, and I know that you guys might present in the future somewhere, and I think that's good. So
yeah, we're actually going to be presenting. Chris and Susanna are going to be presenting the RPM program at the NIPTA conference coming up this fall. We're trying to also get into the APTA conference that's in October as well, to present that to all the other authorities around or other bus companies around the nation. So yeah, it's been a big success.
I don't know where this falls under the future or old business. I'd like to make a request to the board. Is that on your agenda here, we have to add possibility, look at future concern, community concern. That way we'll be able to bring up some of the things that happen in the community and keep up informed of what's going on with the community. And also that, you know, that CNT meeting gonna be meeting on August the 7th and have someone to be representing the community concern. And the last thing I'd like to mention is that I'm on this WCNY committee, and we're looking for talent people who might want to become in the entertainment field. I got some, I'll pass this out to someone who would like to take a look at this, who would like to become in the entertainment community, and they have a contract for, I think, $144,000. They're training inner city people. This is gonna be like a what you call a pioneer program they signed up with. And then I'm gonna pass this out, someone can take a look at it if you want to. About, you're gonna train people to become actors or something, you know, all of the details and stuff like that. And they're gonna be paying for that to happen and stuff like that. So, as you know, in the city, local, you can start in the city. If anybody who want, know somebody between 18 and 35 years old who might want to get into.
Oh, I just missed that.
Mike,
I had something for you.
They forgot 78, you know?
Okay, all right.
But anybody who wanted to become into entertainment, WCNY is on their website, WCNY.org. And you can look at it, and they're gonna train, they can start in Syracuse, this area right here. It's gonna be like a pioneer program right now. So if anybody have anything, go to WCNY.org and look at that agenda, and it'll tell you exactly.
Good. And we can bring those stuff up during future business all the time.
Okay.
Very good. So, any other comments? Robert?
One quick question. In the past, we had a hydrogen bus stop. Excuse me, a hydrogen bus come, and we had the opportunity to see it.
Yeah.
And I was unavailable. Is the hydrogen bus coming back?
Right now, we don't have anything scheduled for it to come back. The demo bus fluctuates. It's one bus that's on either coast or out multiple times in the country, but we can reach out to the manufacturer to see if we can get that bus back up here for it.
See if they're on the East Coast.
Yeah.
Good. Any other questions? Council, you've been quiet, so that's good. All right, we'll move for adjournment. Have a great weekend, everybody. Thank you.
Thank you.